G'day everyone, and welcome back to this ShareCafe Hidden Gems webinar. Thanks for your time. We always appreciate your time on a Friday. It seems like no one has long lunches anymore. Now, today we are discussing MRI devices, tungsten, base metals and financial services, so never a dull moment. Now, for those of you who asked questions last week of Arctis, we've followed up with an interview with Daniel live this week. Given his internet dropped out, we didn't have time for that Q&A. A video of that Q&A will be on ShareCafe and Finance News Network this weekend. Now, a plug for our sponsor. We're sponsored now by Tiger Broking, which is really the most sophisticated trading app in the market. So don't be shy. Check out that app. It has, every morning we use the app to get insights, behind the numbers. We can check out what are the best performing industries, stocks, obviously, but also thematics and that sort of thing. So it really enables us to get a better understanding of what's going on in the market. It's also has live pricing, which is obviously rare these days from online brokers. So check out the app. Okay, let's make a start. First up, we have Imricor Medical, market cap of around $63 million. We have with us Steve Wedan, who is both the president, CEO and board chair. The company is a leading developer of innovative MRI compatible medical devices. Steve, over to you. Thank you.
Thanks very much, and I appreciate everyone joining this morning. First couple of slides here, just you could go right through those to there's a disclosure, and then the next slide, please. There we go. So I'll start with the medicine. A cardiac ablation is an interventional procedure used to treat what's called a cardiac arrhythmia, where a person's heart's not beating properly. And with cardiac ablation, various catheters are guided into a patient's heart to diagnose the arrhythmia and selectively destroy or ablate the cardiac tissue in a way that restores normal heart rhythm. And these procedures, like most interventional procedures, are guided by X-ray imaging. And this is a picture of a conventional X-ray EP lab, where EP stands for electrophysiology. Note that as the doctor views the X-ray images on the screens, the heart can't be seen because the heart is invisible to X-rays. And because of this, back in the mid-90s, doctors could already see the limitations of X-ray guided ablations, and they dreamed of doing these procedures guided by MRI instead. With MRI, they'd be able to, for the first time, see the heart they were working on, so they'd be able to individualize the treatment strategies for every patient's unique anatomy, and they'd be able to, for the first time, verify that the ablation therapy they delivered was permanent rather than temporary, which is a big problem, and the main reason that, for instance, almost half of atrial fibrillation ablations, those patients require a second redo procedure. The only thing missing was a set of interventional tools like single-use consumable devices such as ablation catheters, diagnostic catheters, sheaths, and other devices that were safe for use in the MRI environment. And making these kinds of tools MRI compatible proved too difficult for everyone who tried until Imricor. Can we go to the next slide, please? Imricor has developed a patented platform technology that allows us to uniquely make interventional devices MRI compatible. And today, we've delivered to the medical market in Europe cardiac ablations guided by real-time MRI in labs we call ICMR EP labs, or Interventional Cardiac Magnetic Resonance EP labs. Next slide. And as we do that, we're transitioning cardiac ablation procedures from the X-ray EP lab to the ICMR EP lab. And importantly, we're not creating a new therapy. And this is not a new procedure. Next slide, please. We simply make the devices that are MR compatible that doctors need to perform the procedure with MRI imaging. And the next slide. It's just a new kind of lab with 21st century imaging capabilities intended to deliver faster, safer, more effective procedures with less expense. And so what we offer physicians, patients, and hospitals are the same kinds of tools and the same procedures that they already do, but with the advantages of MRI imaging. And also, MRI is a radiation-free imaging modality. So there's no radiation for the patient, there's no radiation for the physician, no radiation for nurses or other medical personnel that are in the room. There's no lead gowns that need to be worn by any of the medical personnel, which create orthopedic problems for people who work in those environments day in and day out. And for the hospital, because this ICMR EP lab houses a normal diagnostic MRI machine, when procedures are not being performed, you can do standard diagnostic imaging of patients and generate additional revenue in that footprint in the hospital in a way that's impossible with a normal cardiac X-ray EP lab. For Imricor, what it means is that once we make this transition from X-ray to ICMR, every device that's used in the ICMR lab has to be MR compatible, and only Imricor makes MR compatible devices. So Imricor captures 100% of the consumable device revenue for every procedure that's done. We have no competition in the ICMR lab. Go to the next slide, please. It's well known, a very big market. It's about a $6 billion worldwide market for just the disposable ablation catheters. It's growing at a high rate, and it's still very much underserved. Next slide, please. And where we stand today, we have this platform technology with a really great path to significant scale. Today, we started with atrial flutter ablations, which is a relatively straightforward ablation procedure. We started in Europe, where there are approximately 1,000 sites, and they do about 70 procedures per site on average across the whole of the EU. Imricor generates about $3,500 per procedure. So every lab we sign up with has about $245,000 US per ICMR lab for each year. And now note that the early adopters, of course, that we have are often higher volume sites. So we can get up to as many as 200 atrial flutter ablations. And once these sites are doing these procedures, they are set up for the next step. And while we believe that ICMR atrial flutter ablations are the best way to do atrial flutter ablations, the reason I started this company back in 2006 was to do complex ablation procedures that are very difficult, where MR adds a significant amount of advantage over conventional X-ray imaging. And our first indication in that space is the ventricular tachycardia ablations. It'll be a key driver for adoption because people will see that we're moving to cover all of the types of arrhythmia ablations that are possible. And we expect that will then increase the number of sites that sign up. Every site, we will about double our revenue in the EU because it comes with a higher ASP for the devices that are used for VT and higher reimbursement for VT. Beyond that, we'll be doing two things, not necessarily in order, but we'll be expanding our geographies. For instance, gaining FDA approval in the US, where there's over 1,100 sites, a higher reimbursement compared to the EU. And really, we expect to generate about 2 times the revenue in the United States that we do in the European Union for the same number of sites. And the path toward getting FDA approval is for us first to get what's called an investigational device exemption, or an IDE. That's the approval to do a clinical trial that's required to get approval for your devices. And that IDE we expect will finish by the end of the year, and we'll have that approval. And then we can move on to a clinical trial, or we can pause and wait a bit depending on how finances look at that time. And we can do a trial either immediately or sometime in the future. Same time, we'll move towards addressing the entire market. And that will be to fulfill all of the indications that we could address with atrial fibrillation ablations. It's the same consumable product set that's used for VT. It is the largest volume of procedures, and that will then provide us access to the full market potential of the $6 billion worldwide market. So my last slide here is just sort of a status of where we are now and what our high-level plans are for the coming years. We launched our products just before the pandemic, and we had this idea that we would sign new sites up, we would get those sites doing procedures, and we would develop over the first couple of years all of the devices that are required to move to ventricular tachycardia ablations beyond atrial flutter. Well, we didn't do many cases during the pandemic, but we did sign up 15 sites. Our cases were those types of cases or procedures that were banned during the pandemic. But now, this spring, we've relaunched our products post-pandemic. We're bringing our current sites online and performing procedures. That's what we did in the second quarter. In the third quarter now, we'll apply for our VT trial. We'll continue bringing our sites online, and we'll begin adding new sites to our roster as well. In the fourth quarter, that's when we'll start the VT trial. We'll continue adding sites. Next year, we'll complete that VT trial, add more sites, and we'll consider that FDA trial depending on how finances look at the time. And then as we move into 2024 and 2025 and beyond, we'll launch our VT products, we'll keep adding more sites, and we'll continue to grow those geographies and progress our atrial fibrillation program. So that's a quick overview, really just about what we do and why we do it. We have a lot of materials online on our website, on the ASX announcement websites, where we have more presentations that are fleshed out with more detail. But with that, I'll just stop and open it up to questions.
Thanks, Steve. Quite a few questions actually coming through. Can just briefly, I know everyone talks about COVID, but you're kind of in the firestorm here. How did COVID affect the business?
It was tough. We launched just a month before the world shut down, and as elective procedures were banned, these are those types of elective procedures. So it really hurt our revenue. What we did though is we, hearing from our investors, listening to them that look, Imricor is a 2023, 2024 story, not so much a 2020, 2021 story. And so we kept leaning into it. We did everything that we said we would do in those 2 years, besides the sales that were prohibited, but we stayed on track for ventricular tachycardia. We stayed on track for our FDA approval. And so we are launching or relaunching this product now with a much closer window between when a site gets started doing atrial flutter ablations and when they'll be able to do ventricular tachycardia ablations. So we're just getting restarted again. We saw the COVID impact sort of lift in April, and we expect and are seeing increased sales each quarter as we move forward. It's a good time now.
And why the focus on Europe to start with?
So when I started the company, I was a US appointed expert in the field of MR compatibility. And the FDA asked me, well, after I just started the company, if we would engage with them to do a cooperative research and development agreement where we would work together with them on a research basis to help learn what's the math, modeling, and testing that's required to prove that anything is MR compatible. And I thought that was a good idea, but I didn't want to be regulated industry at the same time we're trying to be a collaborative research partner with the agency. So we brought our clinical and development work and our clinical release work to Europe first. But now we're on our way back to the United States, and it's the path is actually quite clear for us.
And can you talk us through that kind of sales and distribution process and kind of how long that takes?
Yeah, it's very variable, but we partner with the MR vendors that sell the scanner that goes inside of that lab. So we have a great partnership with Siemens, and we have a great partnership with Philips, and I expect that we're going to grow a great partnership with GE, which really covers then all of the three major manufacturers of MRI equipment. And then we work together with their sales teams that are already in the field, the same teams that place conventional X-ray EP lab equipment. They can place ICMR EP lab equipment. So it's very collaborative. Some sites move very quickly from a construction phase to having a new lab. Others will start to replace X-ray equipment with MR equipment as we move forward. And in many cases, to get started very quickly, we can utilize an existing MR scanner in a hospital to do cases. We just bring our equipment in and make an EP lab out of that diagnostic imaging suite that exists.
And have you done any sort of cost analysis on your process? Is this about a better process, or is this about a cheaper product, for example?
For even the simple ablation procedures like atrial flutter, we've designed our equipment to be to cost similar to what existing ablation catheters and other devices cost. We wanted the per procedure cost to be very much the same as it is in conventional labs. The value proposition is that if we can do the procedure right in one procedure by using the MR data, the MR images to make sure that we've got a durable solution in one procedure rather than two or three, then the overall price per patient goes way down. Yeah, so it's
there's some scale to it.
I lost my train of thought. Sorry, go ahead.
It is later at night there, but where do you fit in terms of Australia with kind of TGA approval and kind of distribution?
Yeah, we have two pieces of our sales. It's a capital equipment piece, an EP recording system, and the catheters that you plug into the EP recording system. Our EP recording system has TGA approval, and the catheter is under review right now. So we expect actually quite soon to be able to launch in Australia. In New Zealand, we have approval already for both devices, and we'll begin that work very soon as well.
And there's a question here, which states you kind of, as mentioned in one of your previous announcements, are your consumables kind of compatible with conventional X-ray machines?
They are. They're not quite as useful in conventional X-ray machines, but especially though our miscellaneous equipment like sheaths and transeptal needles, not so much the ablation catheter that really is very specialized because we use the MRI system itself to track it, and there's technology that allows that to happen only in the ICMR lab. But other devices, we make sure that they're conspicuous in X-ray and that they can be used to deliver other devices in that X-ray EP lab.
And so the FDA approval is obviously something looking forward for the company. Can you talk us through that process and kind of timing?
You bet. So you start with this IDE that I mentioned, and once we have an IDE approved, then we have shared with the FDA all of our safety data and a clinical trial design. Then we execute that clinical trial, it gets reviewed, and FDA approval hopefully follows shortly thereafter. But it can be a couple of years of a process. That's why when we get our IDE approved, which we believe we'll have by the end of this year, we're going to take an assessment of whether it makes sense for us to drive forward with FDA approval right now, knowing that we wouldn't get approval for a couple of years anyway, or let European revenue ramp up so that we can self-fund that trial.
So that's all we have time for. There's a couple more questions there. If you don't mind, you can answer those live and type in your answers if you've got time. It'd be appreciated.
You bet. Thank you very much.
Thanks for your time, Steve. Next up, we have WT Financial Group. We welcome them back. We have with us Keith Cullen, who's both Managing Director and one of the founders. The company is a diversified financial services group that contains two distinct channels. Their primary business-to-business operation under the financial advice brands of Wealth Today, Synchron and Sentry. And then we also have the direct-to-consumer operations under Spring Financial Group. We welcome back Keith. Keith, nice to see you. Over to you.
Yeah, thanks, Tim. Appreciate it, and thanks everyone for joining us. Well, my focus today is going to be to go through our indicative results for the year. But Tim, if you flip through the first couple of slides, I think we've got the disclaimer there. For those of you that don't know the company, I'll give a quick overview of our background. When we started WT back in 2010, we actually launched under the name of Spring Financial Group, and for the first sort of 7 years of our operation, our entire focus was direct to consumer. And so we had built a large network of salaried advisors providing financial planning advice, accounting and tax services, and mortgage brokerage services direct to consumers out of our offices in Sydney, Brisbane, Melbourne. In the wake of the Royal Commission and some significant industry disruption and the unravelling of, I guess, what had become a completely vertically integrated model where most of the big independent financial advisor groups had been controlled by the banks and product providers, we saw all of that unravel in the wake of the Royal Commission, and we saw a significant opportunity to sort of fill the shoes of some of those players and to fill the void that was left by the banks and others vacating the space. We thought that independent financial advisors could really benefit from all of the many tools and the intellectual property that we'd built in our direct-to-consumer business. So we bit the bullet and took the decision to sort of pivot to become a primarily B2B focused business. We sold off various parts of our direct-to-consumer operation, and we started our foray into what is known as AFSL licensing services or dealer group services for independent financial advisors, with the acquisition of a small dealer group known as Wealth Today in 2018. And we followed that up with the acquisition then of Sentry Group in 2021, and more recently Synchron Group in March of this year. And so the business along the way changed its name from Spring Financial Group to WT Financial Group Limited. We changed our ticker from SFL to WTL. And here we sit today as one of the largest dealer groups in the country. So Tim, if you could flick onto the next slide just to put some metrics around that. We are third in size in terms of number of advisors and some other key metrics to only Insignia, which is the former IOOF, and AMP, both of which are institutionally owned and operated groups. So we're really the largest non-institutionally owned, non-product producing group in the country now. We have around 600 financial advisors that operate under their own brand names under one of our three cohorts of Wealth Today, Sentry, and Synchron Group. We've got more than $16 billion of funds under advice across the network, a very significant in-force annual insurance premium book in excess of $360 million. And we write around, our network writes around $25 million a year in new insurance premium. And our advisors deal with just short of 100,000 retail and wholesale consumers. So how's all that gone for us? Well, it's been quite a journey transforming the business like that, a big commitment made by our major shareholders and the executive team to sort of pivot a couple of years ago. And we've been lucky to have really strong shareholder support on this journey. If you can flick through to the next slide. I suppose FY 2022 saw us complete that Sentry acquisition at the start of the year in sort of late July, and in mid-March as we completed the Synchron acquisition. And that's we've come out with these indicative results because we think we'll be late in the month with our final financial statements, given the complexity around the notes and getting the consolidated balance sheets all done because of those acquisitions. And we wanted to come out with the indicative results at a P&L level to say to everyone, it's been a good result. Gross revenue of just short of 104 million, a gross profit of 11 million, an EBITDA line of just short of 4 million for the year, with an underlying net profit before tax of 2.8 million. At a statutory level, that'll be impacted by a one-off charge of about $400,000 associated with some debt restructuring we did around that acquisition. And so, look, a really good result. From a tax perspective, is we'll have a statutory tax calculation that has still been finalised and will form part of, obviously, our financial statements later in the month. But we have significant carry forward tax losses, so the company will be paying no tax on a cash basis. And if we flick through to the next slide, Tim, we'll see how this plays into now with the Synchron acquisition having made a significant contribution in just those last 3 months. It augurs well for our guidance for 2023, when we will have the benefit of a Synchron for that entire period. So we put this guidance out when we did the Synchron acquisition a few months ago. And I think if you look at what we've been able to achieve just with a few months of that, in the FY 2022 year, as you'll see, it gives us the confidence to come out and restate this guidance for this year. So we're looking towards $170 million in revenue, a gross profit of around $18 million or more, an EBITDA line of 7 million, up from that 3.8 or 3.9, net profit before tax up from the underlying 2.825, and assuming a statutory tax calculation of $1 million, a net profit after tax of 4 million. Again, importantly, we've got those carry forward tax losses, but we're also in a unique position in the company of sitting on around $1.4 million of franking credits. So we'll be looking to return to a dividend paying proposition and be able to frank our dividends going forward, well in advance of us actually getting to a position of having to pay tax on a cash basis. So just flick through to the next couple of slides, Tim. People ask us why you're confident about the future of financial advice. Pretty simply, demand for advice is growing considerably in Australia. We're on the doorstep of a very large intergenerational wealth transfer. We've got the largest cohort ever making their way into aged care that need aged care advice. We've got all that intergenerational wealth transfer advice for both those passing the money on and those inheriting it, looking for strategic investment advice, and all the estate planning and legacy planning. So demand is going up at a time when the industry is professionalised, and we've seen a lot of advisors exit. So we've got less advisors dealing with higher demand, able to increase their prices and their margin. And I think that'll about wrap us up time-wise. Tim, if you flick through to the next one, a couple of other points. We've had a real regulatory and legislative burden over the last 10 years in our industry. We've seen that we've had our previous government and now the new government very supportive of what's been called the Quality of Advice Review, looking at cutting a lot of the red tape burden in our industry and duplication of regulation in our industry to help drive down the cost of advice for consumers. So we think that really augurs well for the industry over the next few years as well. All right, Tim, I think I've kept it to about our 10 minutes there. If we flick through to the next slide.
Coming waiting soon for the next slide, but I'll
here it comes. Fantastic. I won't bore you with the details of the board. A very experienced board from a financial services perspective and also a mergers and acquisition perspective. But most critically, with our board and management, is board and the key executives and employees within our company own around 40% of the business. So there's fantastic alignment between the interests of all shareholders and the board and executive.
Thanks, Keith. I mean, being so aligned probably means that moving forward, there's a dividend policy that's attractive for shareholders. Can I assume that?
Look, Tim, as we've maintained the company's got a really strong dividend history. We've paid out around $7 million in dividends in our first several years of operation, and certainly trust me as the founder and second largest shareholder of the company and largest non-institutional shareholder of the company, as I'm very motivated myself to see us return to dividends at the right time. We think the right time for that will be during the course of this financial year sometime. So we're not intending to announce a dividend off the back of this profit. We've got some payments to make associated with the back end payments of the couple of large acquisitions we've done. So it's all about prudent capital management for now, but certainly as and when the situation suits us, we'll be back to dividends as soon as possible.
And Keith, you've grown from somewhere near 50 advisors to up to 600, and you've obviously had to integrate a lot of different businesses. You've got different platforms, etc. Do you kind of get some scale costs? There's a question here around PI insurance. Do you get the benefits of kind of scale with some costs that are normally an advisor would wear on their own?
Yeah, absolutely we do. There's to support a large network or even a smaller network of advisors, you need a certain amount of intellectual property in the business to help advisors deal with their ongoing education and training, with the great diversity of clients they deal with and different strategies they deal with. Once you've got that intellectual property in the business, it is very scalable, Tim. So, look, it's the headcount's expensive, but in a lot of circumstances with things like education and training, for example, whether you've got 50 people showing up to a session or 500, it costs the same amount of money to deliver. So there's a great deal of efficiency that comes out of getting the scale into the business. Things like PI insurance, great example. There's buying power that comes, whether it's technology or whether it's PI insurance or whatever the other support services are that we need in the businesses, we pick up that efficiency as well.
And moving forward, what are some of the strategic objectives you have as directors of the business? Well, let's start with that question, and I'll follow up something in a minute.
Yeah, sure. Look, I mean, I think really bedding down and continuing to bed down the efficiencies that arise out of the acquisitions that we've done. So I'm very proud of the work the executive team's done already in that regard over the last 12 months and just in a short space of time since the Synchron acquisition. But we need to now really refine that process so that we're delivering services really efficiently to the advisors across the three cohorts, and then help them grow their businesses. We participate in the revenue line of the vast majority of our advisors, and so anything that we can do to help them grow their businesses helps grow our revenue and profitability as well. And that's where that growth in demand in advice presents a really good outlook for our individual advisors and also the company.
And I mean, you've always been optimistic about the financial advice industry, Keith, but not everyone else is. Can you talk through the upside and the potential you still see?
Yeah, well, look, I get that other people haven't been because of the regulatory turmoil and the turmoil that came out of the Royal Commission and so on, and the turmoil created through that vertically integrated model. Well, that's behind us now, and what we're left with is a the similar thing that they saw after a major regulatory review in the UK. That is, less players left dealing in an environment where there's increasing demand from consumers. And that's what makes me very enthusiastic about it. There's some issues for government to deal with, and with our new Minister, Stephen Jones, is very motivated to deal with these with the industry, I think. The two key things are how to excite new entrants into the market, because we've got an aging advisor population, which again, for those of us left behind in the industry, it's good, less advisors, more demand. So we need to really confront that issue, and that'll be part of addressing the issue of bringing the cost of advice down so more consumers can access it. So those things are more of a structural issue for government and society to bring the cost of advice down for more to be able to access it. That'll be an additional benefit for those of us in the industry.
And just finishing, you've made some significant acquisitions over the last 12 months. Are there any more planned? Are you opportunistic in that regard?
We'll remain opportunistic. There's no question in that, Tim. But acquisitions are no longer a strategic imperative for us. But we will, we will act opportunistically if they arise. And there's certainly further consolidation opportunities out there. But it's not a strategic imperative now, as we've got the right scale. It's important now for us to deliver for our advisors, to help them build strong and robust businesses, which will make ours more robust in turn and help us attract more advisors into the group. And then also look at how we can diversify our revenue lines now that we've got that level of scale in the business.
Keith, that's all we have time for. Always good to have a chat. Have a good weekend, mate.
Thanks so much indeed. Thanks everyone for joining us.
Thank you. Next up, we have EQ Resources, ASX code EQR, market cap around $63 million. We have with us Kevin MacNeill, who's the CEO. The company aims to be the leading tungsten producer in Australia through their tungsten assets at Mount Carbide in North Queensland. Over to you, Kevin. Thanks for your time.
Yeah, thanks. If you could just rip through the next couple of slides, please. I just wanted to talk to you a little bit about EQ Resources, the company, and just a quick company snapshot. We currently around 65 million market cap. We currently trade around 5 cents a share, and we've been come up in the last couple of years as we redevelop a historic property up here at Mount Carbide. We do have a very senior board that's quite experienced. Thanks. Next slide. And yeah, I'm hailing from the beautiful Mount Carbide site, which is about an hour up the range from the historic mining town of Port Douglas. Just a little joke there, but anyway, I get to live in the beautiful town of Port Douglas on the way. But we have excellent infrastructure, and we're able to draw a workforce, so we don't have to have camps and expensive housing for people. So it's quite an easy development here. And I just wanted to talk to you a little bit about critical metals, if you could go to the next slide. So you hear the buzzword critical metals. What does this mean, right? Well, I'll just give you a little education on tungsten. So between China and Russia control somewhere around 87% of the world's tungsten. And I'm just going to take you through a few slides to let you know what tungsten is, and to just show how important it is and the future growth of that could be coming with tungsten, and why you should be positioned in tungsten. So as you can see, the China supply is going down, and their consumption is going up in the meantime on the right-hand slide there. So if you could go to the next slide. Next slide, please. Yeah, so tungsten, some of its uses are in cell phones. Next slide, please. The vibration in particular in cell phones. In airplanes, it's in the weight and balance of airplanes, and also in both airframes in the plane. So without tungsten, you would see the result that's happening on the screen. Next pics. New nanotechnology into computer chips, which makes them more resilient and faster in particular. Next, please. One of the main uses is hardening of steel and in several different equipment. Next, please. Military application makes up about 5 to 10% of the consumption used in tanks and various hardening of steel protection. And this is something that we see is growing quite rapidly as the NATO countries ramp up production of military equipment. Next, please. Tungsten carbide drill bits. I think we've all heard of that as well. Next, please. Again, in the oil and gas industry, also consumes about 5 to 10% tungsten in drill bits and casings. Next. Something near and dear to our heart as a producer up here is all the cutting edges and hardening steel in the bulldozers, excavator teeth. All that has tungsten in it. Without tungsten, we would be in dire straits. Next. The automotive industry is a big consumer of tungsten in both the manufacturing of the engines, boring of the steel components. And we'll talk a little bit about the EV market here in a second. Next slide, please. One of the new uses of tungsten is in the electric vehicles where they're welding the copper components with a tungsten alloy. And this is a new industry that's starting and it's consuming a large amount of tungsten. Next, please. Right down to your ballpoint pens. Next slide. So one of the recent developments that's happened here is in the EV battery space, where a fast charging battery on the anode component of the battery, a recent announcement came out that they're changing the time to charge an EV battery could be reduced to 5 minutes with this tungsten niobium alloy that they're making. And again, this is in the R&D stage, but it is rolling out. And one of the major tungsten suppliers funded Nyobolt $50 million to develop. Next, please. Up here at EQ Resources, we do have the development partner Cronimet, which is a large German family-owned business. Cronimet turn about $5 billion a year, and myself, I come out of this group. They're a 50-50 joint venture partner on the waste dumps and tailings operation. And they're one of the largest metal recyclers in Europe. Next. We're in a phase development at Mount Carbide. So we just finished our first phase where we put in a large wet crushing and screening plant. We are opening up and we are retreating a large low-grade waste dump. And the second phase of that operation is opening up the open pit. And the third phase is to go underground. So we're just in the development on the open pit phase now. Next. This was our phase one on the left-hand side. This was our planned development, and you can see the completion on the right-hand side, and this is now operational. Next, please. This is our phase two development, which is designed for larger crushing and screening capacity and also to reduce operating costs. Next. This is just a picture of the new installation that we just finished and completed, and we are seeing the effects. We're on target for a record production month this month with the initiation of this new plant. Next, please. One of the unique things at Mount Carbide is what we our use of technology. So we have two what we call Xrt Sorting Plants, and this is really quite an interesting piece of kit out of Germany. I've been using them since 2009, and this technology reduces the mass coming out, or the volume of ore. So we put in 100 tons an hour into the machine, and 10 tons an hour come out of the machine with all the 95% of the tungsten contained in the 10%, which allows us to mine very low grade ores, including the low grade stockpile ore. So we just recently purchased the second unit, and there'll be a third one coming in the near future with the second phase development. Next, please. Along with it, by using this technology, we're also run a full-scale quarry at the operation here, and we provide. We've been generating revenues over the last couple of years of about $4 million a year out of the quarry operation, and that's just byproducts out of the waste dump and from the sorter. So it gives us a nice little grounding basis and extra income. Next, please. Again, we have a very strong ESG. We just got through our local rodeo, which we sponsor. We do a Mitchell River sponsorship, and it's something that's very near and dear to my heart. So we are very engaged in the ESG component of the operations around the local area here. Next, please. Again, I just wanted to stress the point that we are Australia's only tungsten producer and one of the few Western tungsten producers. And this is a brownfields ramp up into the next phase, which we're fully funded for. And we are advancing very quickly to ramp up the production. You can see this is how we ship our bags out of Townsville. And again, on the right picture is just a shot of our current production from the wet screen. Next, please. This is our ramp up. We're in the third block right now. And when the open pit comes online, you can see the significant ramp up in the tungsten production and also in revenue. So I guess what I want to say is that we're really a de-risked operation at this point. We have all our staffing in place. We don't need to staff anymore. When the open pit ore comes on, it's literally 10 times the grade the ore that we're treating now. And that's why we get such a bump up in revenue. So that's quite an exciting little development happening at Mount Carbide. Next, please. A week ago or so, we just announced the new resource, and this resource changed from indicated from inferred, and it came up about 5-6 times, and that gets changed over to ore that's usable. So this new release of a BFS is coming out in the next couple of months, and you will see this be quite dramatic change. Next slide, please. Next slide, please. There you go. Yeah, this is just a shot of the ore body. Next, please. And just from an exploration point of view on the concessions, we are surrounded and we do have excellent exploration targets. We do have a big underground that we'll be developing. So we see this development being over a 20-30 year mine life currently that we can. And just like to thank you for your time.
Thank you, Kevin. A few questions coming through here. Just when you talk about kind of EV and sort of the energy transition, where does tungsten fit in? Is it actually used right now in EV batteries?
It's used in the EV cars. The batteries are still in development, but like I said, that the charging time's coming down from like 30 minutes down to 5 minutes with the new anode that's coming out of a tungsten niobium anode. So we have great future, but the main use is in the welding of all the electrical components in the EVs. The welding rods have a copper tungsten welding rods.
And we're seeing a lot of, US legislation passed just recently, which is looking towards Australia in particular as a supplier. Are you getting any government support in terms of tungsten? We know that other areas in terms of critical minerals are.
Yeah, we are. We've got 2 government grants on the sorting technology, and then we have a $6 million grant that has been announced to us. It has been delayed, like several other critical metals, but we are in touch with the minister's office, and we're quite confident that that will come through. But it was a $6 million grant to accelerate, which we did. We started the acceleration progress about 4 months ago.
And can you give us some more detail on who your kind of type of customer is now and what they're using the tungsten for?
Yeah, we provide to all around the world, but one of our main customers wants to remain silent, but it's a non-Chinese source. Let's put it that way. But again, tungsten is used in all those industries that we referred to earlier on, hardening of steel, and then one of the interesting things is in the US from 2026 onwards. No supplier providing armament to the US military is allowed to use Chinese tungsten. It has to be Western sourced tungsten.
And I mean, with all this political support and obviously an increased use of tungsten, you're getting a lot of inbound inquiries?
Yeah, it's quite certainly the end users are very limited, the people that convert tungsten. So there's only a handful of Western converters in the world. So, but certainly the price of tungsten has come up from $20,000 a ton to $35,000 a ton over the last couple of years, and we certainly see it climbing further.
And just finally, can you give us an idea of what the financials look like as you scale up production?
Yeah, we did a bankable feasibility study, and really in the next 3 to 4 years, you're looking at an NPV of on the BFS of about 131 million. We do expect that to increase significantly with the new resources that we just drilled off, and we're putting those back through the feasibility stage again, and then extend out that mine life. And then we also did a scoping document for the underground, which obviously you're not allowed to talk about economics on a scoping document, but it looked very good.
Kevin, that's all we have time for. I think we're going to hear a lot more about tungsten. Have a nice weekend, and we'll get you back on in 6 months or so.
Okay, thank you very much, sir.
Thank you. Okay, next up we have Galileo Mining. Market cap around $211 million, ASX code GAL. Stocks had an astounding 300% return. We welcome back Brad Underwood, who's both the chairman and managing director. The company's focused on discovering base metals in Western Australia, and the company's also exploring for large-scale magnetic nickel copper deposits. Brad, welcome back. Over to you. Thank you.
Thanks, Tim. And thanks everyone for listening in on this quick presentation, followed by questions if anyone has any. If we can go to the next slide and the one after that. These are our key messages. I understand there are a number of people who have probably been following Galileo for a while, and I thank you very much for your support. Then we've got people that are new to this story. So I'll quickly go through these key messages, and if you can remember any of these going into the future, I think my job will have been well done. We are well supported. Our largest shareholder is successful mining entrepreneur Mark Creasy. Our second largest shareholder is IGO. We have high value palladium and nickel targets, and I think we've demonstrated that through the discovery we've made at Norseman. Everything we do here is Western Australia. We have a track record of running multiple drill campaigns throughout the year. And because of the discovery we made at Norseman in May, we now have ongoing drilling for the foreseeable future, and we have 2 rigs on site as of this moment. We have an early discovery market valuation. It looks potentially to be very economic, and we hope that with additional drilling, we will increase the size and understanding of what we have in the area. We've recently undertaken a $20 million placement, and we have around $25 million cash on hand at the moment. Next slide, please. Quick snapshot. And as Tim mentioned, we have had a very quick price appreciation on the back of the discovery we've made at Norseman. And that's why we undertake exploration, is to develop those resources needed in the future. And the risk reward profile for investors is such that if we make discoveries and continue to make discoveries, the value creation involved with that activity can be very high. So we have a current market cap of around $200 million. And I mentioned Mark Creasy, our major shareholder, 26%, and IGO at 8% of the stock. Next slide, please. We have a 4-person board. After we made the discovery, we brought in Cecilia Kamari, who's our non-executive director and a lawyer in Perth here. She specializes in mining law. Matt White, our CFO and COSEC, Noel O'Brien, who in particular is very skilled in metallurgy, which is an important element for the work that we have coming up. Noel spent 30 years in Africa and has a lot of knowledge about the mining of palladium and platinum in that area. So we'll get into some more details about the similarities we see between what we have at Norseman and what is in South Africa. But Noel will be very important for us going into the future. And then we have myself as a professional exploration geologist. Next slide, please. Everything we do is in Western Australia, and in particular, if we focus on Norseman and the amount of infrastructure in the area, you can see we are operating in a very well-developed mining space. There are a huge number of mines in the area, and on the slide there, you'll see we have a selection of mines. There are literally hundreds of mines from very large to very small in that region. It is based on mining. The towns there were built on mining, and we think it is very, very pro-mining district and one of the best places to operate in Western Australia. There's a gas, water, and rail within 5 kilometres of the project, and there's a deep water port of Esperance 2 hours to the south. We also have the Fraser Range project, which we are still actively exploring. Of course, the large Nova mine that's operating there, owned by our second largest shareholder, IGO. Next slide, please. And the next slide. This is a more detailed look at the region around Norseman. I mentioned the amount of infrastructure in the area. The tenements are also prospective for komatiite style nickel, for lithium. We've even had sniffs of pegmatites through the area, for gold, and for nickel, cobalt, laterite mineralization. What we are focused on at the moment is the palladium, platinum, gold, rhodium, nickel, copper mineralization associated with sulfides at the base of an ultramafic sill. So it's a very good prospect to be working. And if we go on to the next slide, you'll see here that we have undertaken a large amount of RC drilling already, and we are continuing to drill at the moment. The discovery hole was 33 meters at just over 2 grams 4E. When we talk about 3E or 4E, what we're saying is really it's 3 elements or 4 elements. It's a convenient way of describing the overall mineralization of that intersection. So in our case, when we say 4E, that's palladium plus platinum plus gold plus rhodium. The other way we report is 3E, where we initially get the results without the rhodium. So 3E is palladium, platinum plus gold, and of course the copper and nickel that is associated with it. One of the great things we've noticed about the mineralization so far is that it is very consistent. It's a large blanket of sulfide mineralization within an ultramafic sill overlying a sediment. And everywhere we've drilled to date, we keep hitting that sulfide zone overlying the sediments. We are seeing some variation in the metal content within that sulfide zone. And with additional drilling, we hope to understand in more detail how the metal content is changing through the earth. And most likely it has a plunge component to it. Once we understand that metal content, we'll be able to focus on those zones that have the highest economic potential and drilling along strike to see how it repeats and changes along to the north. Next slide, please. These are the 2 sections to the north. These were drilled on a very tight spacing because of the program of works. The approvals we had from the mines department at the time only allowed us for quite a small area of drilling. So initially we did 50-meter line spacing and 50-meter holes along the line. We now have approvals to drill up to 2 kilometers along strike to the north. And we have pending approvals to drill up to 5 kilometers, which is the entire length of the prospective horizon in that area. Next slide, please. In geology, we like to look at global analogies because or even analogies within Australia itself. We couldn't find any analogies within Australia. So we looked to South Africa. I mentioned before, we have a director who spent 30 years in South Africa. And what we found is that there are some deposits in South Africa that have a similar style of mineralization. The similarities include the disseminated nature of the sulfide mineralization, the metal contents, the types of metals that are involved with that sulfide. In our case, it's palladium, platinum, rhodium, gold, copper, and nickel. These are the same as what we see in the Platte Reef deposits in South Africa, although the ratios of those metals are different. Why we look for analogies is because it helps us understand the potential in the area. We know that the South African deposits are very extensive, so that gives us the hope that the mineralization at Norseman will be similarly extensive, and therefore we should go out and explore in much more detail. So that's why part of the reason we raised the additional $20 million. So we now have the financial flexibility to go out and drill those targets we believe have the potential to host a lot more mineralization. The other thing about the Platte Reef and the similar nature of the sulfide mineralization is we hope the similarities will flow through into metallurgical test work, which we intend on undertaking when we have good quality diamond drilling. And we have started diamond core drilling. If we go on to the next slide, please. Oh, sorry, that's okay. We'll just mention that we are undertaking diamond drilling at the moment. We've got a 2,000 meter program of diamond drilling. We've got 10,000 meters of RC drilling that's currently ongoing. And we have the ability to bring more rigs in and to extend the contracts as required. Also at Norseman, we have the Jimbalana and Mission Sill prospects. These are slightly earlier stage in that we have done a lot of air core drilling in the area. And we have demonstrated that there are palladium, nickel, and copper anomalism over 10 kilometers of strike at the Mission Sill prospect. We also have the Jimbalana prospect where we have hit massive sulfides with some mineralization. So it's telling us that these areas, as well as Callisto, are very prospective and they warrant a lot more drilling. So part of the money that we raised recently will be spent on exploring these new areas as well. Next slide, please. And the next slide. I'll just mention briefly the Fraser Range joint venture project. Next slide. We've been exploring in this area for a number of years. We are in a joint venture with the Creasy Group, our major shareholder. The way we explore in the Fraser Range is through geophysics. We are exploring for undercover mineralized systems. We have been successful in identifying 2 mineralized systems with sulfides. However, it appears that both of those mineralized systems aren't economic. But what it's telling us is that our exploration methodology is effective in identifying sulfide mineralization, and we continue to do EM surveying in the area, building up a suite of targets for drill testing. Next slide, please. That's a magnetic map of the region that we are focusing on in the Fraser Range at the moment. We have the Green Moon and Easterly prospects. We also have a new tenement to the south. We're doing wide-ranging EM surveys, looking to build up a number of targets, and then we'll go out and drill test all of those. Next slide, please. So as well as the Norseman project, we are actively exploring in the Fraser Range. We are well funded for all of our exploration programs we have coming up. We believe we have an early discovery market valuation, and if we continue to be successful, then we'd expect to see that valuation change again. We've demonstrated the prospectivity of the Norseman region. We believe there's the potential for that region to be a palladium province. This is the first time economic mineralization of that type has been discovered in Norseman. And from there, I wouldn't be surprised if a lot more mineralization is found in the area. We are a very active explorer with a highly experienced team. And very importantly, we are focused on the high demand metals, palladium, platinum, nickel, copper, cobalt, and rhodium. Thanks for listening. And if we have any questions.
We do have some questions, Brad. Thank you. Congratulations. You've come a long way over the last 12 months. Can you talk us through the capital raising? You've managed to raise $20 million in a very difficult market. What did that introduce some more significant or more sophisticated investors back onto the register?
Yes, we're very well supported by our major shareholders in that placement. We also have a number of early stage investments from institutions. So as is typical for those types of funds, they like to take a relatively small amount and then build their position over time. So it was very well supported, and it was also completed in a time where the market was very volatile. So I think it has helped support our share price during that period of volatility, because it's demonstrated to the market that our major shareholders are very supportive. And if they think $1.20 a share is a good price, then I think that indicates to the market something about the share price at that point in time.
It certainly does. There's a question here. You have 5 kilometres of strike at Callisto. Where does it look like it's going, and where do you think the most value will come from this discovery?
Yeah, so that's quite a difficult question, and the main reason why we're doing a lot more drilling. So at the moment, we've drilled on such a tight drill spacing that it's hard to understand the metal distribution. So there's 2 parts to it. One is the sulfide blanket that overlies, that is at the base of the sill. So the sulfide blanket appears to be consistent as we drill at that position, but the metal content within the sulfide changes. And that's the trick, is to understand the high value metal content and where it's going. At this early stage, we can say that the sediment is dipping to the east, and it appears that there is some plunge component to the metal distribution within the sulfide. We really just have to do a lot more drilling to understand that.
And the company, really, the focus has really changed from exploration to resource development. How significant does this kind of change the outlook for the company? And personally, how rewarding has this been, and how difficult is it to manage this kind of transition?
I think it's completely changed the nature of our company from early stage exploration through to resource development. I think we are lucky in that our team has done a lot of resource drilling before and experienced this type of growth before in other companies. So we aren't unfamiliar with it. It is part of our professional careers to make discoveries. It doesn't happen very often. If it happens every 5 years, I think that's a good result. So personally, we are very happy that we have again managed to make a discovery. And I think it's a reflection of the team and the support that we have that we've been able to get this far.
And can you give us a kind of insight? We've kind of always asked this question, but given you're ramping things up quickly, what are the kind of current stresses in the exploration industry? How hard is it to get rigs and get assay results back?
Things have improved in terms of rig availability and assays. The assay return time from the lab is still 3 to 4 weeks. Over Christmas, it had blown out to 12 to 14. So things have improved in that area. Where we are struggling a little bit, but we are still managing to be successful, is in the recruitment of really good quality staff. So there's a huge labour shortage in Western Australia across all industries, and we have been affected by that.
And Brad, just another question here. You've kind of got an aggressive exploration program underway, having kicked off the 3rd round of RC with diamond drilling to start next week. What are you hoping this drilling will tell you about the regional potential at Norseman?
There's the chance that the drilling we're undertaking at the moment is going to blow the whole region wide apart. So if we are successful in drilling 1 kilometre to the north and 2 kilometres to the north, and we can demonstrate the mineralisation is still there, and we know that the host rocks continue for over 10 kilometres at some of the other sills, then that could be really significant. And that's part of the reason we're undertaking the drilling. We've got the drilling around the mineralisation we have at the moment, and then we've got the long strike drilling. So the potential is there to be a real game changer, but we'll just have to wait for the drill results.
And Brad, that's all we have time for, unfortunately. Congratulations on your success. We'll follow with interest. There's a few more questions here. I'll shoot them to you over the weekend if you don't mind.
Great. Thanks very much, Tim.
Great. Thank you, everyone. That's all we have time for in regards to the webinar. We'll be back again next week. Enjoy your weekend. See you then.